Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're going to hop into the news real quick before we look at the charts. So, quickly, we have a pretty action packed news week. We have today coming the crude oil inventories, so it's coming in about 10 minutes, and then we have the FOMC meeting minutes coming out later today. So, this will be pretty important. It's going to cause some volatility, I'm sure. We're going to get a good idea of where the Fed is, kind of thinking what they're going to be doing next. However, I'm going to give you my opinion in a second here of what I think is going to happen, and I'll tell you exactly why I have this opinion. Then May 25th, so tomorrow, we're going to be getting the jobless claims and the GDP quarter over quarter numbers. So again, going to be a lot of volatility in the morning. So watch out for this. Very, very important data coming here. And the jobless claims is going to be pretty interesting. I do not think we're going to get a huge jump from the forecast. I do think we're going to have an increase in jobless claims, but a lot of people who have gotten laid off, especially in the tech industry, they're on severance. So I believe, I may be incorrect about this, but I believe that they are technically not counted as being unemployed. So until that severance is cut, or at least a certain time frame occurs, like they pass a threshold, I believe, that's when they start getting counted as being jobless or unemployed. So maybe not even jobless, maybe just unemployed. So, again, we'll see how the numbers come out. I am expecting an increase, but nothing too dramatic. I don't think anything too dramatic will happen. But I could be wrong if my data about that's wrong, because we have had some significant layoffs in the tech industry. And then later into the week, May 26th, we have a bunch of information that's going to be very, very key, important for the market, for the economy. So we're going to get an idea of how the consumer's doing. We're going to get the consumer spending month over month. Again, the U.S. core PCE numbers, price year over year and month over month, and then we're getting the durable goods cost. So this is going to be huge, right? This is going to be really, really big. This is going to cause a ton of volatility in the dollar. So we're going to watch for this on May 26th. And then University of Michigan sentiment. This tends to move the markets pretty well. So never sleep on this. Keep your eye on this and respect it. So watch out for later in the day on May 26th. The Michigan sentiment numbers are going to come out as well. Now, before I hop into the charts, I just want to talk about the FOMC that's coming today. Now, I do think that FOMC, I think Jerome Powell is going to raise rates again. I think he's going to raise 0.25 again. Now, there's a couple reasons why. I'm just going to lay out my top two. My first one is because some data has come out where there is some justification for him to raise rates. And I do think that he is going to stick to his plan and raise those rates. Now, the second reason, and to me this is actually the more powerful reason of my opinion. And again, this is just my opinion, and you don't have to believe this or not, but it seems to be true. If you're unaware, Jerome Powell recently, I want to say a month or two ago, was fooled into believing he was talking to the Ukrainian president Zelensky in a private, vid chat, and in that talk, for whatever reason, Jerome Powell was discussing U.S. economic strategy and made it very clear that no matter what the data says, and I want to repeat that, no matter what the data says, he will be raising rates 2 more times. And since that meeting's come out, we've had one rate hike, and I think he's going to stick to his word, and he's going to raise rates 1 more time. If you're going to ask me why was he talking to Zelensky privately about U.S. economic policy and strategy, I don't know, but he did. Why did he think that was okay? I don't know, but he did. And why did he not say that to the American people? I don't know, but he did. And I'm going to trust what he says privately more so than what he says publicly. And so far, what he says privately has come to pass. So no matter what the data says, no matter what any bank says, I'm going to trust that he's going to raise rates again. Okay? Next is the dollar. Let's take a quick look at the dollar, see what's going on in the charts. So the dollar's having a beautiful rise. Came into the level of 103.65. Remember, I've been calling for that all the way down here. So far, dollar has performed fairly within expectations, and now I am looking for this to probably slow down around this zone here. Okay, so I do think we're going to see a slowdown in the dollar coming into this general zone, and then we're likely going to go into one of two things. Both are bullish, by the way, for the dollar. We're going to go into a bullish consolidation, ping-ponging in between these zones, or we're going to have a bullish retracement and then look to make a higher low from these lows down here. Okay, I do not see any bearish sort of structure here for a dollar at all. I would be looking for a bullish play over the next coming months. And like I've been calling, look for the daily downtrend line to eventually be targeted, and then potentially even the monthly bearish fair value gap zone, the low end around 106, to be the ultimate target for dollar to get to prior to then another pretty significant high pivot formation and then a breakdown. Okay, but as of right now, unlike most in the world, I've been calling for dollar to die for no reason, where we're trading in a 7-year support zone, tapping into monthly bullish fair liquidity. And then we've also had a change of character already, where we had a massive downtrend from the tops here at 2022, had this pivot here, took out this pivot off of this rise, and then made a equal bottom structure, a double bottom structure here, and are popping up. This is textbook. So I do not understand why anyone was bearish on dollar, going, at least like going crazy, saying dollar was going to go to 80 or something, or 95. I don't know, but I've been screaming about it consistently. Dollar is bullish. Dollar is bullish. Same thing I've been saying about oil. What have I always said? This is the decade of the dollar. Decade of oil. It doesn't matter if it's bearish 1, 2, or 3 years within the decade. Dollar is going to be trading above 120 before 2028. Bank it. Bank it. Bank it. Okay? It's going to happen. You're going to see dollar way up here. Way up here. Okay? It's going to happen because life is going to become unaffordable. It's set in stone, baby. I'm telling you. You don't have to believe me, but wait for it. Wait for it. And we're going to get into the oil chart in a second as well. I'm going to explain again why this is going to happen. Next is the Dow. Let's take a quick look at Dow. We'll look at S&P and NASDAQ as well. So far, been performing within expectations. Again, pretty textbook stuff. Took out the low side here, tapped into the liquidity, also tapped into the breakout trend line here, pop up. And what did it do? Came into the bearish fair value gap up here, tapping back into the pivots here and failed off of, and then now coming into the circled zone of where liquidity is. Now, if we're going to have a bullish rise in Dow, okay, we're going to be looking for a higher low structure to start forming down here, okay? We're going to start looking for it. We're going to look for these lows to hold. If that fails, then we're looking for a break back down, potentially all the way down under the low pivots down here, looking at like 29,000 to 28,500. Okay, so we're likely going to hold up here, but this is going to be a key zone to watch. Very key zone to watch. It is possible we can come down here and make like an equal bottom structure, but it's more likely we're going to make a higher low, because as we're coming into the zone on the dollar where we're at around 103.65 to 104.2, we should slow down within that zone, and the slowdown should give the Dow some breathing room to pop up and come back towards probably around like 33,000 to 34,000. All right, next is the S&P. Let's take a quick look at the S&P. So S&P came up into the bearish fair value gap. This did exceed my expectations with this pop up right here. I did not think it'd need another pop up to take out this liquidity here, to take out the sell side liquidity here. And my apologies, the buy side liquidity here, but it did, and now it's failed off. And just like the Dow, I'm looking for this to break down further and coming for the sell side down here, the low pivots down here, grab that liquidity, fill out these fair value gaps, and then ultimately come in towards about 3950 to 3900, and then we'll start to see how price action develops here, and whether I get super bearish or if we're going to build out a higher low structure, just like with the Dow over here. Okay, so it's a very similar structure to the Dow, which is to be expected. Next is the NASDAQ. Let's see how the NASDAQ is doing. So NASDAQ, its extension has been incredible, very, very strong. Tech in of itself has been very impressive. So, I can't say I'm surprised looking at tech. I can't say I'm surprised looking at tech, in hindsight. But as this was developing, I for sure did not see it getting all the way up to the orange zone. I did think that we get into the green zone here and tap into this fair value gap here and fail off of, but we didn't. We actually had another leg up, but now we're tapping into this orange zone, and to me this is a major zone of failure. Took out this pivot here, so took out the buy side liquidity on this level here, and we're likely going to have a pullback all the way down, coming under these pivots down here, grabbing the sell side here, and then breaking down again and pretty much targeting this consolidation. So I don't think this is avoidable right now, especially as the dollar over the next, I would say, 2 weeks. So we're probably going to get a strong dollar for this week, maybe a somewhat weakening dollar sometime next week, and then the week after we'll probably strengthen again in the dollar. I think within that environment, you're likely to see NASDAQ trade down. But NASDAQ is a pretty interesting character. It's always overextended compared to the S&P and Dow. It's always got an extension to the upside or downside that's overextended compared to them. So we'll just let this play out. But overall, extremely impressive move. But I do think that this is the area where it's likely going to slow down. Okay, we may get a bounce here, like you see drawn here, if we slow down the dollar, let's say today, and then sometime early next week the dollar really weakens out. You may see another bounce into the orange zone, but ultimately this orange zone to me is going to be a key zone where you'll probably see the failure. All right, next is oil, I believe. So let me pull that up here. So here is oil. So let's let that load up. Okay, so oil, if you've been following me for any time, I've been bullish on oil for over a year now, super bullish on oil. I do think oil is going to do extremely well. So far, it's actually followed this doodle pretty well, though this low wick here was unexpected. Did not foresee it breaking down and taking out this low. I was looking for a higher low structure, but overall, the same sentiment is what we're getting here. Kind of like that divergent sword structure, double bottom structure. I ultimately see oil breaking up back above these high pivots up here and virtually getting back towards 90 to 100 bucks per barrel over the next coming months. We're just like dollar. This blue zone is a multi-year support zone. I believe it's almost 5 years old. This is likely going to hold. We had this massive spike up because Saudi Arabia cut supply, and I'm telling you right now, you're likely going to see a huge demand for oil for the rest of the year as we start to see a lot of these other countries fail in their needs for energy. I'm namely talking about the Germanys of the world. And then if the war is going to pick up again, which it looks like it may, as we potentially have gotten a Ukrainian invasion, or I should say insurgents have invaded Russia, that could lead to another escalation, which is going to then lead to another move up in oil. And in my opinion, this is a bullish structure in oil. We are likely going to see this break all the way up, come back towards the 80s to the 90s, tapping into the hundreds, and then you're going to be looking for, over the next coming years, a break past 150. And I'm not kidding, you're likely going to see this break past 150. If you look at this from a monthly structure, this is just the beginning, in my opinion. This has had an extremely strong move. Okay, we broke through this structure. Now I have it drawn here potentially where we have to break all the way down and tap this trend line. However, this is not the likely path. The likely path is that we hold this zone. This zone is held, and if you look very closely on the monthly time frame, what are you seeing here? These are what we call buy up wicks. You're seeing a clear floor is being held at this consolidation and this general zone. Okay, so do not underestimate what we're looking at here. The moment we have a bullish month, I don't know if it's this month, I don't know if it's next month or the month after, but the moment we have a bullish month akin to just something like this, doesn't have to be a crazy candle, just something like this candle right here, you will see oil break back up towards this zone up here about 100, and then look for consolidation that will, in my opinion, lead to a new bull cycle that will be leaving people speechless, and they will not know what to do. Okay, I'm not trying to scare you, but I'm trying to be extremely real with you and ring the alarm bell. Life is going to get unimaginably more expensive. Okay, the dollar chart has shown me that, and the oil chart is definitely showing me that. Prepare now. Prepare now. Be as conservative as you can. Stack up on things you need, and be prepared now. Do everything you can to get yourself in the best possible situation that you can, because I do not know where the limits are, and it's coming. This is coming. Saudi Arabia let the cat out of the bag, in my opinion. They will not play ball with the U.S. anymore, and this current administration has made it very clear they will not do anything to subside the pain that is coming from the demand side of oil, of the oil market. Okay, unless something changes, this is the reality right now. Okay, next is gold and silver. So gold so far is playing out as expected, generally, just like with oil. Kind of surprised me with this move up here. Did not think we were going to spike to make a new all-time high right here and fail off of it. I was pretty convinced right here was pretty much it, that we had our beautiful move, a absolutely fabulous move on gold, and this was going to lead to the breakdown. But it seemed like we need one more little spike up to grab that liquidity, and now we're like going to get that move back down towards this level I have marked here at about 1930 to 1890-ish, so around this zone here first, and then once we get towards here, look for, in my opinion, a consolidation. That'll probably lead to a little bit of a move up, and then another breakdown going back towards the 1800s, in my opinion. Now, I am super bullish on gold. I'm not saying this is going to be, the end of gold. I actually think this is a massive opportunity if you missed the rally. Okay, so in the swing trade service, if you've been in the swing trade service, we were long all the way gold down here. We did end up closing about all of our positions all throughout this. So I did not foresee this happening. I did think we were going to do this and then this, what we're looking at, but it went way beyond my expectations, and it just exploded. Now, I'm not complaining. I mean, it was great trades. We had some great positions on GLD, gold miners, etc. But this was way beyond my expectations. But I see this as an opportunity, right? We're going to come back down. You can maybe reload, start building out longer term positions if that's what you're interested in, because gold, in my opinion, will follow oil and it will follow the dollar. I think you're going to see a lot of the commodities with dollar just go up because of just fear and demand. So watch for gold to do pretty well over a good period chunk of time. We're talking about years here, but in the short term, I'm looking for a pullback coming into the 1930s to the 1890s, and then looking for consolidation to happen there. And that consolidation, I have to wait and see how the sentiment is, what the formation is, the structure, but it's most likely going to have a short-term bullish sentiment and then lead towards a bearish break. But we'll see how that plays out. Next is silver. So let's take a quick look at silver. So again, playing out very similar to gold as expected. Broke up, swing failure pattern up here, and then filled out all the liquidity, and now it's pulling back into this pretty much this major zone here, this massive trending move here, and we're probably coming into a couple of imbalances over here, some fair value gaps here, and we're also coming into this rising trend line, which is very likely to break. Same with this rising trend line down here, very likely to break. I ultimately see silver getting towards $22 and then eventually trading into like $20, 20.5 or 21. So around this zone I have marked here. Okay, but overall it's been playing out pretty well. I do think that this is going to lead to an extension down to here, give or take. You may see something like this, and then you may see something like that, but you're likely going to get near this zone sooner rather than later. All right, let's take a quick look at Bitcoin. And I'm going to talk on our Bitcoin, our crypto positions overall real quick. So anyone who's in the swing trade service. I also want to talk about the stock positions real quick. So, before I touch on the chart here, let me just quickly go to the Discord and let me show you this here. So let's touch on the stocks real quick. So, if you've been in the swing trade service, this has been an extremely slow time for stocks. Okay, now this is part of the game, and I've made it very clear to anyone who's following the trades. Again, I can't force the market to give me opportunity. I'm going to take the opportunity where I see it. I'm going to do my best to grab it, but most importantly, I'm going to play it safe always. The game is to survive, and then also if you survive, you are there when opportunity arises, right? Because you survived. But with the stock market, there just hasn't been that much. Now, January was a great start to the year. We did very well. But then from February to March and to April into this month, I mean, it's really been slow. Now, we have been active in building positions, opening some positions, but mostly just building out existing positions. So, we haven't been able to bank on anything right now. So we're kind of in a washer machine, I would say, in the stock world. So we have positions that are in the red, we have some that are break even, and we have some that are in the money. But nothing too crazy. I will say, as I mentioned, the Dow coming into that zone, that support zone I'm looking at, that whole liquidity zone, I do think that we're coming close to the point where we're going to get another pivot low and then make that move up. And during this next move up, I'm confident we'll be able to let go of some of these stock positions. Now, I don't know for sure. Market, no one can actually predict what the market's going to do at any given time. But I am confident that we are getting close to where we can let go of some positions. But this quarter, and I would say most of Q1, was very, very slow. I'm looking for Q3 to have a pickup. Okay, I'm looking for Q3 to have a pickup, and hopefully we do. We've had some good trades here and there, of course. Meta was a great trade, 44%. C limited SC, 38%. But it's been overall very slow. And it's also, when you compare it to like the crypto positions, the crypto activity much slower than the crypto activity. I mean, we've had an incredible year, right? So, January is a killer. February was, I would say, very good. And then March was an absolute monster, right? We had so many trades that we were able to bank in on. And then, April slowed down, and May's been pretty good. So comparing it to crypto, the stock side, the swing trade service, I understand has been very lackluster. But again, I can't force the markets to give me opportunities. I just have to try and position myself. And if you're following me, in a way where we're ready for those opportunities when they finally come. Now, the reason why I'm bringing this up with the crypto, if you are in the swing trade service, you know that I've been transitioning from the long side from the short side of the market to the long side, right? So we actually only have 2 shorts open currently. So we're still short Bitcoin. So we're chilling in the money with Bitcoin. We have Kava, we're slightly in the red on this short. But in the long side, a lot of these longs, some of them have been open for a while, but a lot of these are new. And a lot of you are probably wondering, well, if you think the market's going to go lower, why would you start transitioning long? And I want to make this very, very clear, okay? Very clear. Drawdown for me, so let's actually use MATIC as an example. Since this is a free trade, so if you're unaware, I do free trades as well. So not just premium trades for members that are paying, but if you're in the Discord and you're not paying for a service, I have the Lime Lover room here, right down here, where you can get the call outs, and I will do a free stock and free crypto position that I'm going into that I share. And so this is one of them, right? So we're in the red right now, but the reason why you want to transition long, even if you foresee it going red in the short term, is because the best way, at least in my opinion, to make money consistently in the markets is to slowly transition away from the crowd. So you have to always remember that when we were long, for example, when we were short majority of our account, for example, the majority of people were long. Okay, the majority of people were long. Everyone was saying Bitcoin's going to 40,000, 50,000. Everyone's saying Ethereum's going back to 3. All this nonsense. You had a guy going on Twitter saying Bitcoin's gonna be $1 million in 90 days. Just absolute stupid people talking, right? So the reason why we're short against this is because we are the ones that they're going to pay to enter short. Okay, when they're running away from their previous idea, and we're in the new place that they want to be in, we're the ones that they're paying to enter. Okay, so we're the ones giving the contracts for them to get into the house that we've been chilling in, and we're leaving because for us the party's ended. They're coming, an hour or 2 late. The party's over. And they're going to realize it, and then they're going to look across the street, and they're going to see there's another party ranging on, and we're going to be at the door, and they're going to pay us again to get in. So my point is, you want to slowly transition away from the crowd. Not immediately, slowly, because you don't know how long euphoric or stupid sentiment will last. You don't know how large the crowd will be. So you want to slowly transition, and that's what smart money does. We slowly transition against the crowd. So as we were closing shorts, what we were doing, we were slowly opening up longs. So we have 1% position here. A lot of these are just like 1% of our account, but we're just going to slowly build them, because then they're going to eventually become 2% of our accounts in this position, 4% of our accounts in this position, 6% here, 7% here, and they're all going to be together a massive very comfortable long position on the market. That's how you have to view this stuff. And that's how we've had this. That's how we've had all these wins with minor losses off of a freak move like Terra Luna. Okay? This is the secret. It's slowly transitioning away from the dumb money. That's how we do this. That's the secret sauce. Okay? So with the positions we're going into on the long side, a lot of them are going to be going into drawdown. I'm sure just about all of them are probably in drawdown, save for like a few, maybe like TON may be in like some slight profit. But the point is, we want to be okay with that. So that's why I always warn people who are following these swing trades, please no leverage, or if you have to do leverage, my God, minimal. Like we're talking like 2x or something, super low. And if you do that, I promise, give it some months. That's all I'm asking. Give it some months. I promise you will see returns, because this strategy it's worked for 100 years and it's going to work for another 100 years. Okay? All right. And it's the best way to trade safely. So when I go long MATIC, I'm not looking just from a daily perspective right now. I'm also looking at a weekly perspective. Okay, so I'm looking at this breaking down further, but what I'm really interested in is the behavior from last week. So I want to we're going to get back to Bitcoin, I promise, just stick with me. I'm looking at last week's behavior. Okay, so a lot of these coins, their weekly charts are starting to tell me that we are potentially looking at a slowdown coming, a slowdown from the selling. And what that means to me is that smart money is starting to build out big, long positions. Okay, we're looking at zones that are going to be very, very attractive for larger positions. So I am looking for potentially more downside on MATIC for sure, potentially. However, we are showing signs that we are slowing this behavior down, and we're looking for this behavior here that will ultimately lead to something like this. Okay, so this is what we were in, and we may still be in, of course, but we're going to start showing signs of this. All right, where we're looking at a bottoming structure, again, a low pivot to then make a higher pivot. Now, this higher pivot may just be a lower high from here, but for us, does that matter? No, it doesn't, because we'll be looking at these levels up here to potentially take profit. So MATIC is a great example where up here at about $1, $1.05, $1.10, easy target for me to take profit. Easy target for me to take profit if the price action tells me to. But I am getting into a very, I would say, opportune time where everyone who is, looking to get on the short side is coming late. We are getting long early. That's how we have to do this. And Bitcoin is the same thing. It's the same exact situation. Bitcoin, you're having right now with Bitcoin, all the smart money had been long down here with us, right? I consider us smart money. We had been building the long all down here, right? We wrote this bad boy up. We wrote this up all the way into the 20s. I think it was like 24, 23,000, all the way from like 18,000. Then we sold that. Then we waited, went long down here, sold up here. So we went long 2 times, and then we start building out shorts up here. Okay, this is where the smart money is doing that, because they bought down here with us. They're going to start closing out positions all throughout here, and that's why you get this structure. Okay, this is smart money selling into the dumb money, and also on the same hand buying up short positions. Okay, buying up short positions like we've been doing. And what are they going to start doing once we start coming into the 24s, 25s? They're going to start slowly transitioning long. Slowly transitioning long. Slowly transitioning long. Okay? I make this extremely clear, because if you understand this, you won't even have to trade with me anymore. You'll be able to trade for yourself. I want you to understand this. You can trade for yourself without me if you understand this principle. You want to slowly transition against the crowd. And that's where most people have an issue. And that's where leverage really fucks you. Leverage forces you not to be slow. You should be slow in your decision making. And you should be slow in how you enter positions. The dumb money are fast. Dumb and fast. Okay? Smart money is slow and methodical. Be smart money. Okay, like stop looking for the get rich quick scheme and start looking for the long term money generator, money printer, whatever the hell you want to call it. Look for something consistent, and this is one of the most consistent ways of trading, and one of the safest ways because we're DCAing into positions. Okay, all right. So make sure to keep asking me questions in the Discord, but be very, very, very careful with the leverage, and please understand that we are essentially transitioning away from the crowd. That's how we make our money, but it has to be slow. It can't be fast. If you look for the bottom or the tops, I promise you're gonna have nothing to trade with. You're gonna lose all your money every single time. I promise. You can have a good month, and within a week you're gonna lose it all. Take it from someone who's been through all this. I've made all the mistakes you've made, and probably more than you haven't. Do not do it. Just be methodical, be consistent, be slow in your decision making, and just think about common sense. If you're gonna buy long up here, why wouldn't you have done it down here? Because if you're doing it up here, I promise the smart guys did it down here. If you're going short, over here or over here, I'm telling you, why would you do it over here, not over here? The smart guys did it over here. Just think about where the smart guys will be, and you'll start being them as well. All right. So for Bitcoin specifically, look for that move back to the 24s, 25s. That's still where I see it getting to, and then we'll start consolidation, and we'll have to see how the price action looks. But in my opinion, it'll be much more likely that we're going to start to see it kind of chill out there. Now, I'm not calling for it to come here and then break up to 30s, 40s, 50s, but I am looking for it to potentially revisit the 28, 29 area once we get towards 24, 25. And then we'll have to see how the price action looks and what the dollar's doing at that time. So again, that's it. I'm sorry I kind of went on my soapbox there, but I just want to make it very clear for all the members that have been following me, and then the new members as well. Just give it time. It's really important that you understand this. If this is not to your liking, that's fine. But this principle is what separates the 10% from the 90%, if that stat is even correct. I honestly think it's probably even less. I think it's even less people making money than consistently than 10%, but I could be wrong. But this is one of those ways to do it. All right, everyone. That is it for this recap. Hopefully, I answered some questions for you. Again, if you have any questions or you disagree with me on anything, or you agree with me, make sure to leave a comment on the video. I'd love to read it, and I'll definitely answer any questions if you have any there. If you haven't joined the Discord, you'll find the link in the description. Please join the Discord. It's totally free. And like I said, I do free content. I do streams, and I also do free trades here and there for the free members. And if you want to become a premium member, you want to join the swing trade service, it's about $40 a month. If you want to join the day trading room, where we're trading Forex, but I'm open to trading other stuff. A lot of people are trying to get funded, so that's why we're mostly trading Forex. You can find that information in the Discord as well. That's about $125 a month. And then if you want to become a tutoring student, you want to learn how I trade, or you want to learn good habits, that's mostly what I teach, is how to actually develop good habits and protect them, cultivate them. And those good habits can pretty much work on any strategy you're using, whether it's swing trading or day trading. Check out the tutoring services. It depends on what you want. You could do per session, but it's about $200 per session. If you want to do multiple sessions, I have a bunch of bundle deals you can find on the Discord or the Patreon. Either way, you're welcome. I would love for you to be in the Discord, whether you're going to be a premium member or not. Love your company. And guys, always remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.